Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news equity markets have cancelled yesterday's relief rally. But first in the US, initial jobless claims rose last week to 215,000, 7.7% higher than the week before, but identical to the same week a year ago. There are now just under 2 million people on these benefits, up slightly from the 1.93 million a year ago. US CPI inflation fell to 2.4% in March, its lowest level since February 2021. Because this was data taken before the tariff chaos, it seems this may be the low point for the foreseeable future. Food was up 3%, rents were up 4%, medical care was up 3%. However, petrol prices restrained the overall rises, down 9.8%. Very low oil prices will keep a lid on the total, even if other living costs rise much faster. Today's US Treasury 30-year bond auction was well supported, but the median yield came in at 4.73%, up from 4.56% at the equivalent event a month ago. And the US government reported a budget deficit of only $161 billion in March, a 32% decrease from the previous year, largely due to a calendar shift in benefit payments. Despite this monthly decline, the broader fiscal picture remains concerning, with the US Treasury reporting a $1.3 trillion deficit for the first half of fiscal 2025, a 23% rise from the previous year. This marks the second highest deficit for the first 6 months of any fiscal year, trailing only the $1.7 trillion gap in fiscal 2021. Tax cuts for the rich in this environment look exceedingly irresponsible, especially if the tax rises on consumers via tariffs don't raise the outlandish sums forecasted. Just how damaged the US government agencies have become, Musk's Doge fired all the safety regulators that oversaw Tesla. The April USDA World Agricultural Supply and Demand Estimate report, out overnight, shows that US corn inventories are lower than expected. Beef exports are expected to fall on retaliatory tariff actions against the US, and beef imports are expected to be lower too for the same tariff reason. The net result seen is lower prices for US producers. Lower prices for US milk producers too as exports shrink. US farmers will be net losers from the tariff hostilities. Across the Pacific, Japanese producer inflation is rising, now its highest since mid-2023. Producer prices there rose 4.2% in March from the same month a year ago, above market estimates of 3.9%. It was their 49th straight month of producer inflation, with costs rising further for most components. Taiwanese exports surged again in March, up 18.6% from a year ago, and a record high for any month. An 8.5% rise was expected. That is 2 consecutive months of outsized expansion. April tariff actions may well affect this impressive result going forward, but if US consumers have no alternative sources, the tariff taxes will fall on the buyer. In China, they not only have to fight off the US tariff policies, they have a resurgence of domestic deflation issues. Their March CPI fell 0.1% when a 0.1% rise was anticipated. Their producer prices fell 2.5% when a 2.3% retreat was anticipated. On the consumer price front, food prices are 0.6% lower than a year ago, of which beef prices fell 10.8% and lamb was down 5.4%. Milk prices fell 1.7% on the same basis. They want to shift to a consumer-based society, but in the meantime their existing export sector is going to take major hits which will affect consumption, and there seems little upside to consumer demand in the current circumstances. Their overcapacity is going to expose them. You wonder if they have any more appetite for capitalism's creative destruction than Western economies, who have proven to have virtually none. In March, Australian inflation expectations fell to 3.6%, a 4-year low, but in April they jumped back to 4.2%, underscoring the ongoing uncertainty surrounding their domestic economic outlook and inflation trajectory in the face of the fallout from the tariff war. Given they have both a jobs and an inflation mandate, the RBA is in for a tricky period ahead with its policy choices. Global container freight rates rose 3% in the past week to be 23% lower than a year ago. Basically, Trans-Pacific rates firmed slightly, while transatlantic rates eased. Bulk cargo rates fell a very sharp 21% in the past week, to be 20% lower than year-ago levels. The US Treasury 10-year yield is now at 4.40%, unchanged from yesterday, and Wall Street is currently down 3.4% on the S&P 500 in its Thursday trade, as the tariff pause relief rally runs out of puff in the face of realities and reverses. The price of gold will start today at just on $3,162 an ounce, up another $92 from yesterday. And oil prices have fallen $2 from yesterday to be just under $60 a barrel in the US, while international Brent price is now just on $63 a barrel. And the Kiwi dollar is now at 57.4 US cents, up 120 basis points from yesterday at this time and a 3-week high. Against the Aussie, we're up 30 basis points at 92.4 Australian cents. Against the euro, we're up 20 basis points from yesterday at 51.3 euro cents. That all means our trade-weighted index starts today at just under 66.5 and up 70 basis points from yesterday. And the Bitcoin price starts today at $79,207 and falling and down 2.4% from yesterday. Volatility over the past 24 hours has been moderate at plus or minus 2.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.